Mayuresh Joshi, fund manager at Angel Broking, joins us now. Mayuresh, so much of news domestically, but I think the markets are clearly focused on what's happening globally. Big event looming large on the 17th. How much are you, keeping track of individual small sector-wise news right now when you're really advising clients, and how much of it is really, hey, wait for the global cues to pan out?
So afternoon, Mini. Clearly, I think the global risk associated with how the markets will perform will linger for some length of time, and that uncertainty related to how global events will pan out will have a bearing on markets. So clearly, I think the way we are reacting is in reaction to how the globe is reacting, and to a certain extent, I think the markets are a little bit disappointed with corporate earnings not panning out the way they were supposed to pan out. So I think the earnings recovery has got postponed again by a couple of quarters, saying that again, I think the kind of reform processes that one really expected to come through, I think those hopes are a little bit delayed, and that has got postponed to the winter session of Parliament. Monsoons have failed. So clearly, I think domestic concerns coupled with what is happening around the globe, and one really is not sure on how Chinese data will pan out. So that uncertainty will continue. But what the Fed does probably, and in our own opinion, I think September hike is not on the cards. So clearly that will provide some respite to the markets. Couple that up with what RBI does in its policy meet will be a key monitorable, but it is the quantum of rate cut that the markets will be looking at. So again, I think the two key risks to the market, at least from a short-term perspective, will create an overhang, and the volatility that we are seeing is clearly a reflection of the events that we are going to witness over the next few days.
And also corporate India is trying to get rid of a lot of leverage. As you can see, Birla Carbon is trying to refinance, or seeking to refinance $900 million of loans taken in 2011. This process of refinancing, re-looking at debt levels is a continuous one. But I am going to ask you about one company that has done very well this year, Mayuresh, and we also heard the management yesterday. In fact, we will be playing out excerpts of our conversation with S. Varadarajan of BPCL. What are you making of BPCL's big thrust and the investment plans it's laid out? It's been the outperformer year to date, up 28% in a tough market. And even today, when the markets are falling, it is up. What's your take on BPCL?
So generally, I think generally the OMC pack has done exceedingly well. Under recoveries, working capital constraints have gone down substantially. Their debt levels have gone down substantially with the fall in oil prices. And if one really expects oil prices to stay in this range, at least for the better part of this year, again, I think they are going to be clean beneficiaries. However, I think there might be some amount of uncertainty, at least from a near-term perspective, on how GRMs will pan out and what kind of inventory losses gains that these companies might report because of the volatility that we saw in crude prices, the expansions that BPCL is doing. So I think clearly, if you look at its overseas portfolio as well, the E&P portfolio, because of the fall in crude prices, might have a hit on its EPS going forward. And clearly what happens with Mozambique is an important aspect to be looked at, along with the capex expansion at Bina. So clearly, I think the positives are very much there in the price. OMCs generally should perform well, except for the kind of seasonality that we might witness in the quarter to come. However, I think our take is that we'll really watch out for earnings, because a lot has been said in terms of how these marketing margins would play out in terms of EPS accretion for all these stocks going up. And even on a price to book parameter, BPCL is close to 1.5 times. So in our opinion, at least from a short-term perspective, it is fairly valued, and I'll really wait for results to come through in this quarter before we take a call. But within this pack, probably I think IOC is something that we are liking, purely based on the capacity expansion and the Paradip expansion that it is doing. I think that will boost its GRMs in a significant manner. And I think all the key attributes that you were talking about for OMCs also work for IOC. So IOC at 1.1 times price to book at this point of time seems attractive to us.
Okay, Mayuresh, I'm looking at the Midcap Gainers, and there is no actual trend that you can foresee. You've got a whole host of companies, from Bajaj Holdings to Container Corporation to Wokha to JSW Energy to Shriram Transport, pretty much representative of all sectors out there. My question to you is that what are the themes that you like in a market like this, when there's so much of uncertainty and so much of risk really in the system?
So clearly, I think from a thematic perspective, private sector banks from the large caps is something that we will continue to like. large cap IT names where we believe that the volume growth and the revenue growth both in dollar and rupee terms should be quite decent over the next few quarters. Again, I think selective pharma names, because I think a lot of pharma names are close to their trailing all-time year valuations. So clearly stocks like Sun and Aurobindo seem attractive to us. And within the mid-cap universe, I think there is no definite theme that we're probably working out at this point of time. It's selective stock picking analysis that we're probably estimating that they would do well from a bottom-up approach. So stocks like Bajaj Electricals, where we believe that the turnaround in the E&P segment has been reflected in the results that have just gone by. And again, on a consolidated basis, I think the consumer durables and the LED, along with the E&P outperformance, should help in EBITDA margin expansion. Stocks like Inox Wind, but the government thrust is there, and obviously I think there are not going to be near-term results being seen with the new government policy on the offshore wind energy projects. But clearly on the standalone performance that the company has posted, I think the capex that it is doing, margins should sustain between the 18.5% kind of levels. Stocks like Transport Corporation, where the valuations have become extremely attractive at this point of time. And though I think they might struggle if GST does not come through, along with the other logistic companies, the standalone performance even without GST has been quite reasonable. So again, I think an earnings CAGR, which is in excess in double digits, should hold out for Transport Corporation, and valuations at 11.5 times are very, very attractive.
Right, Mayuresh, we leave it over here. Thanks so much for joining us on this leg of the show.
Thank you.
Well, we head into a short break, but up next we get you Corporate India and the voices from there, Pawan Munjal and S. Varadarajan and Girish Ramachandran from TCS. Three different sectors, BPCL, TCS and Hero MotoCorp. All of that coming up for you in just a minute.